Hello and welcome back to the Basic Accounting series. This is a continuation of the second video where we passed the journal entries and understood the logic behind debiting or crediting the accounts. Now, in the third video, we'll go a step ahead and we will prepare the ledger accounts or the T accounts from the same transactions. Now, I've kept the transactions same journal entries will be used so that till the end, till the time you prepare the balance sheet, you know right from the beginning the transaction was passed in the journal book and then posted to the ledger accounts. Then the balances were carried forward to the trial balance from where we prepared the balance sheet and the income statement. So let's keep the examples same with a small change. I've added one transaction here. See, if I am making payments from my business, I should have cash balance with me. So I've taken an example. Let's say it was in the previous video too. Took an example that I'm running coaching classes. So let's say I started business with cash rupees 25,000. How the transaction would be? Shweta started business with cash rupees 25,000. Now this is the transaction. What entry will I pass? Cash account debit. From the business point of view, cash is coming in. So cash account debit to equity. What is equity? Equity represents my ownership in the business. Now for accounting purposes, the owners of the business and the business, these are two different entities. We don't treat them as one and the same. So Shweta is different and the business that she's running is different. These are two different entities. So this equity represents my money in the business, my ownership in the business. So let's say tomorrow if I make some profit here and if I'm not withdrawing that profit, if I'm reinvesting that profit in the business, my equity will increase. When the value of my business increases, my equity increases provided I haven't withdrawn that profit. So let's move ahead. These were the journal entries. I've explained the logic in the previous video. So we'll straight away go to posting the journal entries in the T accounts. Now I have already posted them in order to control the length of the video, the duration of the video. I've posted them. We'll just understand the logic as to why the entries are posted on the debit or the credit side of T accounts. And one more thing to note is we made this one addition, cash account debit to equity. Let's start. The first transaction was cash account debit to unearned revenue. So we need to prepare two T accounts, cash account and unearned revenue. Now this is cash account. So you can see cash account looks different from others because I've just not prepared them in the proper format because I had to adjust everything in this space. This is how ideally a T account should look like. Particulars, debit amount, particulars and credit amount. Now there used to be one more column here and which was named as journal folio. Journal folio is nothing but page number. See, when people used to prepare accounts manually, the journal book, now we took examples of only 12 transactions. Throughout the year, so many number of transactions used to take place. Imagine a bank where so many people come and deposit the money or withdraw money on a daily basis. So if they are preparing accounts manually, imagine the size of their journal book. So if I open the cash account and I have to trace like what exactly this account was, accounts receivable 1800, let me check the main transaction, the original transaction. So where will I find it? The journal book is this big. So this ledger account used to have one more small column called J dot. Now so many students they ask what does this mean, J dot F. So that is called as journal folio, that is page number of the journal book where this particular entry was recorded. Similarly, even in journal entries, there has to be one additional column. Now here you can see particulars, debit and credit amount. So there has to be an additional column called LF, that is ledger folio. So that used to give me the page number on which this particular transaction is recorded in the journal. So cash account used to be on a certain page number. So if I have to trace this particular cash transaction was recorded in the ledger on which page number, so page number will be mentioned here. Nowadays, we don't prepare accounts manually, everything is computerized, so this really doesn't have any relevance, journal folio or the ledger folio. Now let's begin. This is the ideal format, but just to fit in the space and save time, I have prepared these T accounts. Now, cash account debit to unearned income. Debit amount. Debit side is the left side, right hand side is the credit. So two unearned income. You can see the transaction here. Two unearned income 500. I debited the cash account to unearned income. Now there's another account unearned income. What happens to this? Unearned income. This is debited. This was credited by cash 500. So what is to and by? This is again, every subject has its own jargon, its own language, its own syntax, its own grammar. So that's how you record. On the debit side, you say to cash, debited to certain account and credited by certain account. So unearned revenue was credited, so we call it credited by cash 500. Cash was debited to unearned income 500. So I've recorded, I've made two entries, debit and credit. Debit and credit. Next one. Salary expenses to salary payable. So salary expenses account debited to salary expenses account debit to salaries payable 700. Salaries payable account was credited by salaries expenses 700. So credited by salaries expenses 700. This is a liability. Salaries payable is a liability. We've discussed that in the previous video. Prepaid insurance is an asset. Prepaid insurance account debit. Prepaid insurance account debit to cash 1000. And another entry to cash 1000 and cash account will be here. Cash account will be credited prepaid insurance by prepaid insurance 1000. Why credited? Cash was going out. We paid. So cash is going out. So credited by 1000. All the assets have a debit balance. So when the balance of asset goes down, that means you're crediting it. Next one. Insurance expenses account debit 100 to prepaid insurance. So insurance expenses account debit to prepaid insurance 100, and we've already prepared the prepaid insurance account. So by insurance expenses 100. It was debited with cash for this transaction and now credited with insurance expenses for this transaction. Now we discussed this in the previous video. Whenever an asset's value has to be brought down, you have to credit it because assets have a debit balance. Now prepaid insurance is an asset. The asset was valued at 1000. After 1 month passed, 1/10 of this got expired. So by insurance expenses 100, which means the value of 1000 prepaid expenses has gone down to 900. Now see, when I try to balance this, higher side total is taken first. So total of prepaid expenses, debit side is 100. Now this side is 1000 and this side is only 100. So what is this difference of 900? Difference is something that I will carry forward to the next month. 1 month has elapsed, 100 rupees gone, expired, I already received the benefit. 900 rupees is still remaining. I am yet to receive the benefit of this 900. So 900 is still an asset. It will be carried forward to the next period, next month, next quarter or next year. So by balance carried forward 900. So now my asset is valued at 900. Now it's important to note, now I am closing this balance, this account is closed. This is the balance that I carry forward. Now we must understand whether this balance is a debit balance or a credit balance. Now which side was heavier before balancing the account? Which side was heavier in this? To cash 1000, by insurance expenses 1000. Debit side, the left hand side, the debit side was heavier, which means this 900 was actually a debit balance. Correct? We are writing it on the credit side, but it is actually the debit balance. So when I post this further to the trial balance, which column will I write? Prepaid expenses 900. Now this is clear. I will record it at 900, not 1000, because 100 has gone. The balance of prepaid account is only 900. But the question is, in the trial balance, will I record this 900 in the debit column or the credit column? In the debit column. Although I am writing this on the credit side, but it represents the debit balance. Debit side was heavier. So by balance carried forward 900 means debit balance is carried forward 900 rupees. So this way I closed this account. Similarly, now we've already seen there are not many, there are just two transactions related to insurance. What happens to this? There is no further transaction related to insurance. So I can close this as well. To prepaid insurance 100, just that, nothing else, no other transaction in this period. So I have to balance it. Now which side is heavier? Obviously the debit side is heavier. Why? There are no transactions in the credit side. So now this will be by balance carried forward. I have to somehow make the total same, 100 and 100. So here 100 rupees by balance carried forward. Now that means insurance expenses. What is the balance of insurance expenses? 100 rupees. Is this a debit balance or a credit balance? Since the debit side was heavier than the credit side, debit side was more than the credit side, this difference represents the debit balance. It is written on the credit side, but it represents debit balance. So when I prepare the trial balance, insurance expenses 100 will be recorded in the debit side, in the debit column. Clear? Next one, bank account debit to cash. So where's the bank account? Bank account debit to cash 2000, and for cash it will be by bank 2000. Bank account was debited with 2000 cash, credited again here with 2000 to bank. Next one, accounts receivable 2000 to sales. Two accounts to be prepared, accounts receivables and sales. So accounts receivables account debit to sales 2000, by accounts receivables 2000. Next transaction, cash account debit 1800, discount allowed 200 to accounts receivable 2000. Now here we've already prepared cash account, so we have a cash account to record 1800. We've prepared accounts receivable. Just now we prepared accounts receivable, so we have that account. We don't have discount allowed, so we need a new account, discount allowed. Now let's see. Cash account debit 1800 to what? To accounts receivables. Straight away record to accounts receivables 1800. Discount allowed account debit 200. Discount allowed account debit to accounts receivable 200. Done. Accounts receivable is credited. Credited by two things, 1800 cash and 200 discount. So accounts receivable is credited by two things, by cash 1800, by discount allowed 200. Next one, purchases account debit to Mr. X. Purchases to Mr. X 1000. Mr. X credited by purchases 1000. Mr. X was a creditor for some period of time until we paid him off. So he was a creditor, he will have a credit balance. His account was credited with purchases 1000. Next one, Mr. X account debit 1000 to cash to discount received. So Mr. X is debited here now, debited with two things. I want to close his account, settle his account. So I paid only 900, but his account was settled, which means 100 rupees was discount. So debited with two things, cash 900 and discount received. This account gets closed here automatically. There is no balance to carry forward. It was closed. Similarly, accounts receivable 2000 was debited. It was debited with 2000. Cash 1800 and discount allowed 200, the account is closed. There is no balance to carry forward, which means these two accounts will not appear in the trial balance. Therefore, not appear in the balance sheet also. Next one. Furniture account debit 1000 to bank 1000. Furniture. Where is furniture? Furniture account debit to bank 1000. Where is bank account? Bank account credited by furniture 1000. Next. Depreciation account debit 100 to furniture 100. Now depreciation account, I'm yet to prepare it. Okay, I'll prepare the depreciation account here since we don't need these transactions anymore. Yes, depreciation account, depreciation expenses. Depreciation account to furniture. So to furniture 100, and furniture account will be credited by 100, by depreciation 100. Why credited? Furniture is an asset. Its value was 1000. After the end of the year, I want to reduce its value to 900. So I will credit furniture account by 100, which will bring down its balance. The debit balance was 1000. Yes. Now after entering 100 rupees depreciation transaction, now the balance, now 1000 balance is 900, which will be carried forward. By balance carried forward 900 and total is 1000 here. So this balance will be carried forward. And what kind of balance is this, debit or credit? It is written on the credit side, but it is the debit balance that is carried forward to the next period. So these were the transactions. We've already posted this one. Now what we do is we close these accounts and carry forward the balances. We saw accounts receivable closed, accounts payable or Mr. X closed. All other transactions will be carried forward to the next period or to the trial balance. Like for salaries payable 700, no other transaction, to balance carried forward 700 star, and 700 is the total now. So what does this represent? Debit or credit balance? Salary is payable. Credit side is heavier and we are writing the balance on the debit side, which means it is the credit balance. Credit side is heavier, so it is the credit balance. This particular amount, when I write it in the trial balance, I will write this amount in the credit column. Credit column. And another logic is salaries payable is a liability. Liabilities always have a credit balance. So salaries payable amount will be written in the credit column. And here in the ledger account, the credit side is heavier. So we're carrying this balance. We just want the total to be same. So we're writing the difference amount here. So this is a credit balance. Similarly, salaries, expenses. Now here the debit side is heavier, no transaction this side. So by balance carried forward 700. So this is a debit balance. Salaries payable is a credit balance. Now why debit balance? All expenses and losses debit. If you remember the golden rule, all expenses and losses are debited. Now salary is an expense, so it will have a debit balance written on the credit side, but this side is heavier, debit side is heavier, so it has a debit balance. Salary is an expense, expenses have a debit balance. Salaries payable is a liability, liabilities have a credit balance. That's how we go about it. Sales, revenue, so it will have a credit, it should have a credit balance. Let's check if it is true. Yes, credit side is heavier, no transaction on the debit side. So to balance carried forward 2000, this is a debit balance. Yes, so let's move ahead. Sorry, this is a credit balance. Purchases, raw materials, whatever you purchase, you use it in the business, so it's sort of an expense. All expenses are debited, debit balance. By balance carried forward, written on the credit side, but it actually represents a debit balance. So it has a debit balance of 1000. Similarly, cash. Cash, when I take the total of debit side, it is 27,300, and right hand side we just had 3,000 transactions worth 3,900. So the difference amount is 23,400. Now this 23,400 is the debit balance. Debit side was heavier. How can we have a credit cash balance? No. How can I spend more than what I have? So cash will always have a debit balance. Why? Can I spend more than the cash that I have with me? No. So 27,300, difference amount 23,400, which means that is the debit balance of cash. Similarly, you can close these accounts. To balance carried forward. Now this is interesting. To balance and by balance. Now discount allowed is an expense. So debit side is heavier. Debit side is heavier. The balance is written on the credit side. What does it represent? Debit or credit? Discount allowed is an expense. It should have a debit balance, does it? Yes. Debit side is heavier. The balance is written on the credit side. It represents the debit balance. Now let's say discount received. Discount received is a benefit, income, revenue, gain. So it should have ideally have a credit balance. Credit all incomes and gains. So obviously here credit side has only one transaction and debit side does not have any transaction. Credit side is heavier. We are writing the balance on the debit side, which represents balance on the credit. So it has a credit balance. Unearned revenue. Unearned revenue. We discussed unearned revenue is a liability. I am yet to provide services to my student. So it is a liability. Liabilities have a credit balance. All liabilities have a credit balance. And yes, it does. It is showing a credit balance of 500 and nothing on the debit side. Credit balance, credit side is heavier. To balance carried forward 500. Similarly, equity. Again, credit side is heavier. To balance carried forward 25,000. This is the total. Depreciation. Depreciation, debit side 100, one entry, to furniture 100, nothing on the credit side, which means debit side is heavier. Debit side is heavier, this will have a debit balance. By balance carried forward 100 star. So this is how you balance the ledger accounts or the T accounts. Now these balances, if you've seen, certain accounts do not have any balance. So accounts receivable, there is no balance carried forward. So this will not be taken to the trial balance. Then comes Mr. X closed, not taken to the trial balance. But all other accounts have balances which are to be taken to the trial balance. Now I'm going to continue. Immediately after recording this one, I'm recording the next video where we'll post these transactions to the trial balance and prepare the trial balance. So I'm going to keep these transactions just like this. So I hope you understood how we post to and by. To is taken as it is, debited to certain account, accounts are debited to certain accounts and credited by certain accounts. So this is how we use the term to and by. And while balancing, the side which is heavier, which is higher, will be the balance. So the balance carried forward will represent the side which is heavier. Debit side is heavier, then the balance carried forward is a debit balance. Credit side is heavier, the balance carried forward is a credit balance. So you just have to remember these concepts. I hope you all now understand how to post the journal entries to the T accounts or the ledger accounts and calculate the balances carry forward. Now next step is preparing the trial balance in the next video. Thank you and happy learning.